What if I told you that you could go from $0 to getting paid every single month without a job in just 10 years? I'm talking about a life where your mailbox or your banking app is filled with notifications of cash deposits while you're sleeping, traveling, or spending time with your family. This isn't about an inheritance. It's not about winning the lottery or getting lucky with a speculative meme coin. This is about a proven system that almost nobody follows because it requires patience and a specific blueprint. By the end of this video, you will know exactly how much you need to invest every month, the specific types of assets you need to buy, and the exact moment you can officially tell your boss that you're done. The clock is ticking on your working years, so let's build your exit strategy. The traditional path to retirement is completely broken. We've been told to work for 40 years, save a little bit of what's left after taxes and inflation, and hope the stock market is up when we turn 65. But look around. Inflation is destroying the purchasing power of every dollar you save. If you just leave your money in a savings account, you are effectively losing wealth every single day. Most people spend their entire lives relying solely on a salary. They are one layoff or one corporate restructuring away from total financial disaster because they never built income-producing assets. You don't actually need more money. You need income that works without you. You need to stop trading your limited hours for dollars and start trading your dollars for assets that work 24 hours a day, 7 days a week without ever asking for a vacation. This is where the core idea of dividend investing comes in. Think of a dividend as a thank you payment from a company. When you own a piece of a profitable business, that company shares its profits with you. Instead of just hoping a stock price goes up so you can sell it later, you are buying a stream of cash flow. This requires a massive mindset shift. Most people look at their brokerage account and focus on the total balance. They want to see a big number, but your goal isn't a big bank account balance. It's a monthly income. If you have $1 million but no way to generate cash from it without selling your shares, you're still tied to the market's volatility. But if you have an engine that spits out $3,000 every month, regardless of whether the market is up or down, you are truly free. You are building a forest of money trees, and the dividends are the fruit they drop every season. And so how do we do this in just 10 years starting from zero? We break it down into a 3-phase game plan. Phase 1 covers years 0 to 2, and it's all about the foundation. In these first 24 months, your primary goal is not wealth, it's habit. You need to learn the basics of the market and start investing small. Even if it's only $100 to $500 a month, consistency is infinitely more important than the amount during this stage. You are training your brain to see money as a tool for investment rather than a tool for consumption. You are setting up your brokerage account, automating your transfers, and buying your first few shares of dividend-paying assets. This is the hardest part because the progress feels slow. You might see a dividend of $2 and think it's not worth it, but that $2 is the first spark of your future fire. Phase 2, which spans years 3 to 6, is the acceleration phase. This is where you have to get aggressive. Since you started with 0, you need to find ways to increase your income streams. Whether it's a side hustle, asking for a raise, or switching to a higher paying career, you need to shove more fuel into the engine. During these years, you must reinvest every single penny of dividends you receive. This is non-negotiable. You aren't touching the cash, you're using it to buy more shares, which in turn pay more dividends. This is where your portfolio starts compounding faster. You'll notice that your own contributions are being joined by the help of the dividends themselves. The snowball is finally starting to roll down the hill, picking up speed and size. Finally, we reach phase 3, which is years 7 to 10, the income engine. By now, the dividends are no longer just pocket change. They are starting to cover your grocery bills, then your car payment, and finally your rent or mortgage. The snowball effect has kicked in with full force. In these final years, you transition from purely reinvesting everything to preparing for partial income. You are fine-tuning your portfolio to ensure it is stable and sustainable. The growth that used to take months now happens in weeks because the base of your capital is so much larger. This is the home stretch where your discipline pays off and the dream of financial freedom becomes a mathematical reality. Let's talk about those numbers so this becomes concrete for you. To understand how much you need, we have to look at your target. Let's say you need $3,000 a month to live comfortably. That's $36,000 a year. Using a realistic and sustainable dividend yield of about 4%, you would need a total portfolio of $900,000. Now, $900,000 might sound like a massive number when you're starting at 0, but remember, you aren't saving $900,000 out of your pocket. You're investing a portion of that, and the rest is being built through market growth and the massive power of compounding through reinvested dividends. If you can ramp up your contributions and choose the right assets, the combination of your capital and the market's growth can bridge that gap much faster than a standard savings account ever could. What should you buy? Focus on two primary categories for a 10-year sprint to simplify and be effective. First, dividend ETFs. These ETFs hold hundreds of dividend-paying companies. Instant diversification. Since you control everything, one company's bad year doesn't affect you. Find funds with dividend growth and blue chip stocks. Blue chip dividend stocks, companies that have raised their dividends for 25 or 50 years, are the second group. These are dividend aristocrats and kings. Combining broad market ETFs with a few high-quality equities creates a balanced growth and safety strategy. Avoid the chasing high yields trap. A 15% dividend is usually a sign of trouble for a stock. We want steady dividends, not short-term ones. Starting from scratch requires eliminating all excuses. Open a brokerage this afternoon. It takes 10 minutes. Automate investing after opening. A percentage of your paycheck should go to your investments when it hits your bank account. Without seeing the money, you won't spend it. To speed this up, check your income hacks. Cut unused memberships and put $50 a month into your dividend fund. Start a side gig to put every dollar into your freedom fund. Your first $1,000 is tougher to save than your first $100,000 because you're fighting your previous spending habits. Once you overcome that first obstacle, psychological momentum is irresistible. Avoid the mistakes that kill most portfolios. Startup delays are the first mistake. Waiting every month compounds irretrievably. The second mistake is expecting big returns. A high yield usually indicates a failing company and a falling stock price. Maintain quality. No dividend reinvestment early is mistake number 3. If you spend dividends in year 3, your money tree babies die before fruiting. Fourth mistake, panic selling. The market drops, it's certain. The market decline is a sale. For dividend investors, it enables you buy more shares at a discount, improving the yield on cost. Most fail because they quit when things get boring or scary, not because math is hard. Just a brief reality check since I value honesty. This approach is neither easy nor guaranteed by magic. A decade of discipline is needed. Market conditions vary, and income growth is crucial. Working a minimum wage job for 10 years will make it difficult to reach $9,000. To invest more, increase your market value. Though difficult, it's quite simple. Math doesn't lie. If you buy income-producing assets and reinvest the proceeds, your money will eventually out-earn you. 10 years from now, imagine your life. On a Tuesday morning, you check your phone and notice that 3 companies have deposited money into your account. Because your assets meet your basic necessities, you may choose how to spend your time. You're an investor and business owner now, not a worker. The ultimate reward is identity change. You reclaimed your time, our only finite resource. From zero to financial freedom through dividend investing requires 1,000 steps, but you can start now. Answer this question in the comments. How much passive income do you need monthly to quit your work and feel free? 2,000, 5,000, 10,000. Document that and let's develop that engine. Don't waste another year working for money. Start your 10-year countdown now.